Hello, Mark Lloyd, Leader on Home Loans. This is part 3 on DTI. Today we'll be going over the conforming loans, FHA, VA, USDA, and even touching on Main State Housing. Maximum DTI for conforming loans, which is Fannie Mae and Freddie Mac. Historic max is 2836. Fannie and Freddie allows up to 43% DTI, but may go as high as 45 to 50 with compensating factors. And only 36% if it's a manual underwrite. The classic rule of thumb ratios are 2836. Meaning your front-end ratio shouldn't exceed 28% and your back-end ratio shouldn't exceed 36%. However, this measure is more conservative than what you might actually see in practice today. For example, back in the heyday, many home borrowers put down 20%. Today, the down payments are often just 3 to 10%, to give you some perspective. But Fannie Mae still does impose a max DTI of 36% for manually underwritten loans, though majority of loans are approved via the automated underwriting system called Desktop Underwriter, or DU. And DU will allow debt to incomes of 45 and also as high as 50 with compensating factors such as plentiful assets, larger down payments, great credit, etc. In other words, you can bend the rules a little bit if you're a good borrower or otherwise. If you have bad credit and nothing in your savings account, don't expect any favors in the DTI department. For Freddie Mac, underwriters must include a written explanation that justifies exceeding the 2836 ratios when files are manually underwritten. Like Fannie, the ratios may go higher if the file is approved via automated underwriting. Maximum DTI ratios for the FHA loans. General guideline maximum ratios of 31 to 43, though it can potentially be much higher, based on findings from an automated underwrite. Potentially as high as 55% or even higher on a case-by-case basis. The maximum DTI for FHA loans depend on both the lender and if it's automatically or manually underwritten. Some lenders will allow whatever the AUS or the automated underwriting system allows, though some lenders have overlays that limit the DTI to a certain number, say 55%. These limits can also be reduced if your credit score is below a certain threshold, such as 620, which is basically a major cutoff. For manual underwritten loans, max debt ratios are 31 to 43%. However, for borrowers who qualify under the FHA's energy efficient homes, EEH, stretch ratios of 33 to 45 use. These limits can be even higher if the borrower has compensating factors such as large down payment, accumulated savings, solid credit history, potential for increased earnings, a minimal housing expense increase, no payment shock, and so on. Yet another reason to build credit and save up money before applying for a mortgage. To sum it up, if you can prove to the lender that you're a strong borrower other than your DTI ratios let on, you might be able to get away with it. Just note that this risk appetite will vary by mortgage lender. Also note that mortgage insurance premiums are included in these figures. Now, for maximum DTI ratio for VA loans, VA states 41% is a max acceptable DTI, and 41% max without compensating factors is likely a limit. However, it's possible to get approved with a DTI between 41 to 50 with compensating factors, or in some cases even higher with certain exemptions. For the VA loan, the same automated manual underwriting rules apply. If you get an AUS approval, maximum DTI ratio can be quite higher. However, if it's manually underwritten, then the maximum debt to income ratio is 41% back end. There is no front end debt requirement for VA loans. Again, as with FHA loans, if you have compensating factors and the lender allows it, you can exceed the 41% threshold and enjoy higher debt to income ratio limits. Specifically, if your residual income is 120% of the acceptable limit for your geography, the 41% DTI can be exceeded so long as the lender gives you the go-ahead. In other words, most of these limits aren't set in stone, assuming you're a sound borrower otherwise. Now, for the maximum debt to income ratio for USDA loans, generally set at 21-41 max. The automated underwriting may allow slightly higher limits, such as a 32-44 max with compensating factors and a minimum credit score of 680. For USDA loans, the maximum DTI ratios are set at 21-41. However, the loan gets approved via Guaranteed Underwriting System, or GUS. These ratios can be exceeded somewhat, similar to the FHA VA loans. If the loan is manually underwritten, the limits may be exceeded if the loan is eligible for debt ratio waiver. Long story short, if you have a credit score of 680 or higher, solid employment history, and potential for increased earnings in the future, you may get approved for USDA loan with higher qualifying ratios. but it's still going to be strict at the 43. If you are looking at Main State Housing, it is a strict 43 front end and a 43% back end DTI with at least a 640 credit score. Tomorrow I'll discuss the debt to income ratio and why it is a good indicator of your financial health. Thank you. You can reach out to me at www.talkwithmarklloyd.com, 207-478-2065. Thank you.